Welcome back, everyone. Today we're going to look at how to analyze leap options on the Options Circle platform. On the leap analysis page, simply go on this tab with the bar chart higher and the arrow. This brings you to the leap options page. Now, first, a couple things. I think leap options is a great way for stock traders to transition over to options. And there's a few reasons really for that. First, there's a lower capital requirement. Leaps allow you to control a large number of shares for a fraction of the cost of buying the stock outright. This frees up capital for other investments. Secondly, there's higher leverage with lower risk. Because leaps expire within 1 to 3 years, they carry less time decay compared to a short-term option trade. This longer time frame means there's more exposure to potential upside while maintaining limited downside as you only risk the premium that you paid. There's also tax advantages. When used correctly, leaps can offer a favorable tax treatment as gains on leaps held over 1 year qualify for long-term capital gains rates, which are often lower than short-term rates applied to capital gains from stocks held less than 1 year. Leaps also can be used as an effective hedge during market volatility. First, they can be used as a stock replacement strategy and define your overall risk to the premium that you paid for the contracts. This works well for stocks largely expected to rise over a longer period of time. Also, you can choose deep in the money calls, and an investor can benefit from favorable delta values, making the leaps move similar to the underlying stock while still limiting downside through defined risk of the premium that you paid. Finally, leaps allow for more flexibility to adjust your position in responses to changing market conditions. For example, if the stocks move as expected, you can roll these leaps into shorter term options to get more aggressive or convert them into a different strategy. For instance, a covered call strategy, selling shorter dated calls against your leap position to collect premium along the way, or even selling iron condors when price action is moving sideways during a consolidation phase. Now let's look at the leap analysis page. At the top here, you have 5 boxes. They're all filtered by 52-week highs. So you have the breakout of 52-week highs, 15% down, 30% down, and so on. This will populate the list below. You can also filter by sector if you'd like, or date. So we have today, last day, and 1 week ago. And then we can go through the groups as well, like similar pages, all stocks and ETFs and indices, all stocks, ETFs, stocks above $1, $3, or $5, or in the indices themselves. And then we have the same table from other pages as well that has the ticker, the price, the 52-week range, the option volume, the put-call volume ratio, the sentiment, the IV change, and the open interest. Now, you can expand the details, so let's just look at Adobe quickly. It'll bring you to the news page right away, but as from other videos, you can go to the conversations. You can look at recent trades that have been done inside of one of our bots. You can look at earnings. You can also look at sweeps and blocks. You can look at the trend chart, or you can pull up the technical chart and see what signals have hit. So as you can see, we have a spinning top signal here. And you can close that. Then we have the next page here, which is leap analysis. And this will bring up a table that you can look at your leaps, and it can give you a lot of different information here. So you have your strike, your call cost, your put cost, the extrinsic value, loan amount, loan APR, the leverage ratio that leap is giving you. Then you have your break even and your busts. So if you scroll over, you'll see your break even levels and your bust rates. And your bust levels here on the right hand side. So let's look at something that's a leap value here. So let's go to January. We're going to have to show more per page. Go to 48. Let's look at what an at-the-money call would be. At-the-money call would be $86.82. The extrinsic value of that contract would be $85.47 because it's mostly made up of time premium right now. And the leverage ratio would be 6.19. So the price that you would need to see in 1 year to break even would be $566.82. That'd be 17.76% total, and that would be a 14.63 annual return. Your bust rate would be at 480. So basically, since you are just trading at the money, if the price of Adobe closes below 480 on January 16th, 2026, it will be a total loss of that contract. Now, you can look at this in different ways as well. Scroll down here, actually, and go to the P&L chart analysis. And you can look at different strategies if you'd like. So this will pull positions in your options chain. So you can go through here if you wanted and test all of this. And you can also get your theoretical value here. So let's look at that 480 strike for 2026 at the money call. So you'll see here down here your P&L chart at expiration price, and then the theoretical price has repopulated. And that's it for the Leap Analysis page. If you have any questions, please reach out to an Options Circle team member and we'll gladly walk you through it. Trade them well, everyone.